Good afternoon, everyone. Jack McGrath with ntmarkets.com. Well, we got the data that we wanted today, a big number off the non-farm payrolls, and the market did not take it well on the treasuries. If you look at a weekly chart, which we sent out to the ntmarket.com, have a look. We have a dominant candle this week where you put in an outside range, and you basically are closing towards the end of the lower end of the range. You have a bearish engulfment of the previous week, and the reversal is debatable whether this is the last trade up was a trend, and then this candle down where you had a higher high, and today's close would be lower than last week's. Possibly people would call that a reversal. I'm a little suspect on whether that was a trend or not. But if you want to say it's a trend, then you're looking for a lower low next week below 130 even. And I think this 130 even level is important. You basically have a double bottom where 2 weeks ago 130 even was the low. Today's low was 130 even. And then the middle bar on the week, the high was 130.129. So double bottom, but it's not triggered until a trade above 130.129. So that's looking here. That's quite a bit of ways away for anyone to really talk about that. If you did happen to get above 130.129, you'd be looking for 1.29 points higher, so almost 2 points higher from 130.129. Nice objective off of that, but it's not in play right now, so it's something that you would pay attention to if the market started to go back up. That's about the only thing positive on that chart. Otherwise, you have that dominant candle down. You have a possible head and shoulders top, where if you started to get below 129.19 area, we had two weekly lows, 18.5. One, oh shoot, I forget the date, but that week low, and then the recent the low of this move was 129.19. So if you draw a line in off of those, that's your neckline. You start to take that out, you have pretty good massive objectives lower off of that pattern. But that wouldn't come into play until you're starting to close below 129.19. Also, you do have a little gap from 129.18.5 down to 14.5 on the left-hand side of that chart. So those are all the negatives on that. And I think the most important is this big dominant candle down today, and you close pretty much on the lower end of the range. What I would expect is some kind of follow through next week on the downside, making new lows. Now, if you don't get that, I think you would be suspect if this, if this is for real, or if the market's going to trade back up a little bit and we're once again stuck in the range. So that's it for today. Take a look at that chart on the website. Have a nice weekend. Jack McGrath with ntmarkets.com. Thank you.
No, I can't.